All right. Well, hello, everyone. Thanks for joining us today. My name is Marc Sheard, and I lead the equity team here at Vancity Investment Management. And the goal today, along with my colleagues, of course, is to discuss two new global equity funds that were recently launched. So we have a global impact fund, which invests in companies that offer goods and services that deliver positive social or environmental impact, along with a global low volatility fund, which invests in securities with lower levels of volatility, or in other words, companies that have lower price swings versus peers, which is a very timely fund considering what we've seen in the market over the past couple of weeks. So as of now, the funds are only available through Vancity Investment Management and our investment counselor team of portfolio managers, who you can find on our website, although we are exploring further distribution options as well. So our plan for today is to go through a presentation on each of the two funds and touch on such things as what the objectives are of each fund and the process behind how they select companies. But please feel free to send us questions that you might have. You just use the Q&A function at the top of your screen. And, time permitting, I will pass them on to our speakers. I mean, we're going to be throwing a lot of information at you today. So, I do expect that people will have questions, and we're more than happy to answer them, as best we can. And this webinar is being recorded, and we're going to post it to the fund websites. So if you want to watch them again at your leisure, you'll be able to find them there. So joining me today are four of my colleagues at Vancity Investment Management, starting with the Impact Fund. We have Morgan Ayres, who is an analyst on the equity team, along with Rachel Beechinor, who is an analyst on the ESG team. For the Global Low Volatility Funds, we have Mike Harvey, a senior analyst on the equity team, and Edmund Ho, a senior analyst on our ESG team. So collectively, they are the main architects behind these new funds and have spent, maybe the past year or two, working to get the funds ready for launch. It has been a long, arduous process, although very rewarding. But we are very happy to now be at the stage where we can, talk about the funds with everyone. We have a maximum of 1 hour for the meeting, and I want to make sure that we respect, all of your time. So why don't we get started? And we're going to kick it off with the Impact Fund first. So Morgan and Rachel, I'm going to hand it off to you two. And if you could both maybe just introduce yourselves very briefly before starting the presentation, I think that would be helpful.
I'll go first. Hi, everyone. My name is Rachel. As Marc said, I'm an ESG analyst on the VCIM team, and I've been with VCIM for about 1.5 years now. Before that, I was in the UK, in London, working as an investment analyst in the responsible investment team at a UK-based asset management firm. And in this role, I was also working on the development of a public equities impact fund. And then prior to that role, I was studying in London at LSE, which is how I ended up working in the UK. And during university, through internships, and then directly out of university, I entered the responsible investment ESG space and have been working in that area since then. I'll pass it over to Morgan to quickly introduce ourselves before we get started.
That's good. Thanks, Rachel. Hi, everyone. My name is Morgan. I'm an analyst here at VCIM. And for the last couple of years, I've been working on this impact fund, which we're excited to talk about today. Just a bit about my background. I started my career at the pension fund in British Columbia, where I spent time on their partnership portfolio, which is a bit of sort of every asset class that you'll see. And then after about 1 year there, I moved over to Vancity, and I've been here for about 3 years, which is kind of crazy. And during that time, I've had the opportunity to work across all of our equity funds and obviously have the opportunity to develop this one. So we're excited to jump into it today. So why don't we move to the next slide, Rach? Okay, so before we could really develop the strategy of what impact investing of our impact portfolio, we had to define what impact investing meant to us and how we could really translate that into the public equity sphere. So after some research and looking at other firms, we decided that to us, impact investing is owning businesses who can create and foster positive social and environmental change through their operations, as well as their products and services. However, we want to ensure that we do not forego any financial returns for our clients. hence our goal of compounding wealth for both the world and our clients. So to achieve this goal of truly having a positively impactful public equities portfolio, we started with our quality investment philosophy and our ESG analysis process, which is used across all of our VCIM funds. And instead, we added an extra emphasis on the services and goods of the businesses that we're looking at. So in particular, we look for companies who produce measurable impact. So we're able to demonstrate to our clients, yourselves, how their investment is going towards generating a positive impact. Of course, all of our investments meet our impact and quality checklist to ensure we're still owning these high quality businesses who have strong competitive advantages, which will allow them to compound growth and their impact over the long term. So when we think about how we introduce an impact-driven approach, we found that a thematic approach was the most effective way to remain focused on areas of impact. So the thematic approach allows us to ensure that the impact is the underlying driver of growth within our companies. So at a high level, thematic funds look to capitalize on long-term industry tailwinds, which represent their themes, where here we look to capitalize on long-term impacts, which represent, or long-term impact tailwinds that represent our trends. So at a very high level, we identify impact themes with long-term potential, narrow that down further with sub-themes to ensure that we're building out themes with investable universes, which then allow us to create a hunting list of potential companies, which we then put through our fundamental and ESG checklists.
We built the impact thematic approach very much on top of our existing bottom-up process. Across all of our VCIM funds, ESG analysis is key to our approach. First, we employ this negative screening, and as many of you will already know, across all our funds, we do not invest in oil and gas, weapons, and gambling. In addition, each name added to each fund is analyzed across 7 key themes under E, S, and G. And each name analyzed by the ESG team is assigned an eligible or ineligible investment label. We integrate ESG analysis into the financial analysis in order to identify those companies that have the potential to succeed in the current world of very quickly evolving environmental risk, increasing social expectations, and changing shareholder demands. We believe that this integrated, socially responsible investment process adds true value, specifically through an additional level of risk management and offers a superior return potential. Another key piece of our ESG strategy is our shareholder engagement focus, which is active across all of our funds. We would say we're very experienced at engaging with company management to generate positive change within their operations. And we plan to use this skill set to encourage companies to disclose impact metrics and generate further impact from the output of their business for names within the impact fund. And then from the fundamental side of analyzing the individual companies, we always begin with looking at the industries the companies operate in, as this is where most competitive advantages are born out of. We specifically look for positive outlooks and strong barriers to entry. We then look at the competitive advantage the companies have, and if that advantage is getting stronger, weaker, staying the same. And one of the most important things we look at is the management team, as they are responsible for allocating the capital, making the important decisions, and also creating a positive environment for their employees. And lastly, last box there, we look at valuation to ensure that we aren't overpaying. We use various tools to do this, including free cash flow yield, discounted cash flows, and relative valuation. And now, moving on to the impact fund's impact themes, we begin by taking a very high level view, 3,000-foot view of the world, and pinpointing pressing global challenges that we believe require more effective solutions or more innovative solutions, or just scaling of already present solutions. We think of these overall themes as complex challenges facing the world that have very complicated and many interdependent factors that will require numerous sets of solutions to solve, both from public and private markets. And we have framed these themes by first thinking broadly what the global challenge is, We then consider what systemic changes and solutions are needed to solve that problem. We then think about how we as investors can contribute effectively to these changes and solutions, and how we want to focus our investment to generate change, as well as those strong financial returns. And as you will see on the slide, we have 4 overall impact themes. Quickly run through them to give a bit of background. Quality of life. So this is based on the fact that there are significant inequalities when comparing the quality of life of individuals across various populations globally. Improving quality of life is a very broad theme that aims to increase the quality of an individual's daily life wherever they may reside in the world. And then moving on to sustainable production and consumption. Humans consume resources every day, fact of life, and this consumption drives prosperity. However, production and consumption also contribute to climate change, biodiversity loss, pollution, and so on. And in general, the world is facing a very difficult challenge of needing to cut resource use while simultaneously supporting higher levels of consumption, a larger population, and driving global prosperity. And then moving on to energy transition. This one's quite straightforward. Decarbonizing the energy sector is a very critical step towards achieving net zero emissions and effectively combating and avoiding the worst effects of climate change. And finally, social inclusion. So this background here is that wealth and opportunity disparities across societies, genders, ethnicities, and other groups create significant barriers to full participation in political, economic, and social life. So by enabling greater participation in society and the economy, this can help promote many benefits such as greater economic opportunities, advancing gender equality, fostering innovation, boosting productivity, as well as enhancing social mobility, and so on. Next slide.
Right. So once we've built out the challenges and the possible solutions needed to address these challenges, we narrow down the investment universe further to identify investable sub-themes. So we do this by actively considering what solution sets are best left to governments and ensuring we, as public equity investors, are investing in areas where given companies' incentives are aligned with generating positive impact. For example, something like investing in education is maybe better left to, the government, where we can better invest in things like healthcare and fintech, that sort of thing. So we look for sub-themes with quality businesses within it where we as investors can really focus our capital to actively contribute to the solution. And by doing so, this is where we're allowing ourselves to ensure the impact we are looking for has a measurable impact and also has the quality businesses that we've mentioned. So within each theme, we have more than one sub-theme or solution. So for example, within the energy transition theme, we've identified energy alternatives and transition enablers as sub-themes, which narrow down our investment universe. And then on to the next slide. Once we've sort of built out our universe, this is where we go back from looking at a top-down analysis to our fundamental approach, which Rachel touched on earlier. And this is the same approach that we use across all of our funds. And we accomplish this through a checklist process, which really helps us limit bias. It ensures alignment with our strategy and creates a repeatable process. So in this step, we also look closely to determine the measurability and the trackability of the company's impact alignment. A key focus is management's vision, as we want to make sure that the company we're investing in is aware of the impact that they're making. And we do this through looking through, their public disclosures as well as conversations with management teams. So we also aim to generate a specific percentage of revenues that align to different SDGs or social development goals. And while a few companies in our portfolio don't necessarily disclose a whole lot, we've instead flagged these organizations for us to further engage with to help improve their level of disclosure. So once we've done this, once a company has gone through our ESG, our impact, and our fundamental checklist, we rank our companies based on fundamentals of the business to assist in our weighting decisions. One thing we really want to highlight here is that impact is not incorporated into the scoring process, as this is where we can really balance the impact versus financial returns. And one thing to note here is that once a company has reached this point in our process, they've already gone through vigorous impact and ESG reviews to ensure that that impact is there and it is measurable. So when you bring this all together, the result is a collection of high quality businesses that make a durable and measurable impact. So if you look on the screen here, moving from left to right, you can see our impact themes, which represent challenges. And then you have our sub-themes, which are potential solutions, and then their associated SDGs, as well as some company examples.
So to put this all into practice, we thought it would be helpful to look at a case study. So we will be focusing on Copart, which is a holding in the portfolio. So starting with the zoomed out view and how we start with the theme and eventually arrive at the investable universe. As already touched on, one of our impact themes is sustainable consumption and production. So as the population is growing, the propensity to consume will only increase. However, this means that we will need to use more resources, which is strenuous on our planet. And in thinking about how to approach this global challenge, we found that a focus on the circular economy and resource efficiencies were effective ways to contribute to the challenge, and as such represent the sub-themes, which you can see here on the screen. And then as you move to the right, we have highlighted the impacts that can be generated by investing in these areas. And then moving further right, the potential specific solutions that we can invest in from a public equity perspective. So for Copart, this sits in the circular economy sub-theme. And as you can see in the investment universe box, it is under the areas of recycling and reuse, specifically damaged vehicle auctions. So next slide. Copart is a provider of online auctions and vehicle remarketing services. It's a great example of a company positively contributing to the circular economy and helping build the circular economy. Nearly all of Copart's revenues are derived from the resale of salvaged vehicles. So buyers then either refurbish or recycle specific parts of the car and return the car or its parts back into the economy. The company diverts waste and averts further emissions from the production of new vehicles and parts to meet market demand. So Copart's management has a very clear vision of generating impact, which is a key thing we look for in all of these companies. This quote you see on the slide is taken directly from their annual report, demonstrating their very clear understanding of the impact they are generating. Additionally, Copart actively tracks the estimated CO2 avoided from drivable as well as their dismantled recycled units, which helps us very much actively track their impact and contribution to the theme. And then on the ESG analysis side of Copart, here we have a quick overview of their performance. The key points that you see on the slide is that they are a founder-led business, which is a good thing to see as it often fosters a strong corporate culture. Copart is also a key supporter of natural disaster relief efforts, and as already touched on, they are a key enabler of the circular economy. And in general, Copart has made very continual ESG improvements, which is something else we look for, including the publication of their inaugural ESG report in October 2022. The company also offers employees competitive benefits, maintains robust safety guidelines, and promotes diversity across their workforce.
Perfect. And then quickly from a fundamental perspective, like Rachel said earlier, we always start with looking at the industry, and Copart's industry is very attractive. They operate within a duopoly, and they also have the largest share between itself and its competitor, IAA. And the result of that is they have higher margins, higher returns, and higher market share. As we saw, Copart has about 55% of the market share, while their competitor has about 25%. And this really lends itself well to generating very strong competitive advantages. In this case, it's economies of scale and a network effect. So the difference really between Copart and IAA is that Copart owns its salvage yards, while IAA tends to lease them. And so this allows them to continuously buy more land, which in turn results in more volume of vehicles, which attracts more buyers, average higher prices, and then more sellers. And then it becomes a really lovely, flywheel effect that continues to build on over time. And when you bring these together, moving on to the next slide, you can see that over the last 10 years, from both an impact and a financial return perspective, Copart has outperformed the relative indices, so the S&P 500 and MSCI World. And this process is really what we aim to replicate across all of our holdings within our fund, so that we aren't foregoing any financial returns for yourselves or clients, but we're also able to show you what type of impact your investments are able to make. And with that, we can take questions and pass it back to you, Marc.
Okay, well, thanks, Morgan, and thanks, Rachel, for the presentation. We do actually have a few questions here, so I'll jump right into them. And Morgan, I think you were the one who touched on this on one of the slides, but can you explain what SDGs are, where they come from and why they're important?
Yeah, so those are the United Nations Sustainable Development Goals. There's 17 of them. And essentially, they are overarching goals that have been put out that will help us enable positive change, essentially, in the world. And we actually started with the SDG framework in terms of actually building out our universe to sort of align and make sure that there were companies where their revenue was directly related to one of those SDGs, or multiple in many cases.
And do the companies report their exposure to SDGs themselves, or how do you get that data?
Yes, I mean, some of them do, which is always sort of a best case scenario. The ones who don't, that's an area that we can actually engage with them and help them either come up with proper reporting processes to help them, provide that information to their investor base. There's also third-party providers that will at least help you get an idea of what type of revenue are related to the SDGs. But right now, any of those tend to be, there's not always a continuous process across the providers. So it's always beneficial when the companies, one, give you that number, and then two, show you how it's actually calculated.
Yeah, and I think that's an important point too, Morgan. Like a lot of external vendors, they have their own way of coming up with certain metrics. And, SDGs, we're not obviously in charge of that. So we will, for each company, have measurements that we're tracking on our own, obviously, along with the company, to ensure that each company is following along the path that we expect them to in terms of the impact that they're having.
Definitely.
And this next question is actually a good one, and I think it's a very important one, because so just saying there are a lot of impact funds that are available right now, and we're seeing more and more. What is it that sets this fund apart from the others?
Yeah, it's a really good question, and it's a question we get a lot. And I would say, and I would love Rachel's input as well, but our differentiating factor is the intentionality between how we actually select our companies. We find that a lot of impact review kind of ends at the company operations, where we think we've gone one step further, or maybe even two steps further, to say, okay, it's great that they operate in a nice manner, but we want to see that their services and products are the ones that are contributing to making a change, right? Like these businesses are the ones that have, hundreds of millions of dollars to allocate towards, making an impact. And so that's really where that intentionality comes from, and where we think we differentiate ourselves.
And
Great,
just to
thanks.
add to that,
No, go ahead, Rachel.
Just to add to that, in Canada, there are no rules for labeling funds ESG impact for the most part. So this is something we've struggled with, where a lot of funds that we would consider ESG, so you're looking more at the operations of a company and how they're treating their employees, emissions targets, so on, are being labeled impacts, and we kind of disagree with that branding. Is for us, as Morgan mentioned, impact is more on the products and services that the company is generating. So it's a tricky spot, but we definitely think that the business has to be generating something that is positively contributing to society.
Great. Thanks, guys. And Rachel, actually, this one I'll ask you to answer. So engagement is, of course, a big part of Vancity's process. Will that tool be utilized on this fund as well?
Yes, for sure. So it will be a slightly different approach to engagement, mostly because these companies are quite high ESG performers, kind of the best of the companies that we would invest in. So I think the focus will very much be more on the disclosure side. There's quite a few companies where they have a very clear impact vision. They're obviously generating a very positive impact, but they might not be able to communicate that very succinctly or even through metrics. So we plan to kind of use our skill set on the engagement front to really make it clear that you have a huge impact. If you're able to communicate that more effectively, it will benefit us and it will benefit you as well.
And Morgan, I think I'm going to give you this question to answer. So, you went through the 4 themes during the presentation, but obviously there's a number of themes that you could have potentially chosen. So can you touch on 1 or 2 themes that you considered for the fund that didn't make the cuts and maybe why they didn't make the cut?
Yeah, for sure. I would say when we started, we had maybe over 10 to 15 potential themes that we started to look at. One of them was housing affordability. Another one was, technology innovation. And those things, I think, they're very obvious from what the name is that, what the impact is directed at. But when we narrowed it down further towards our sub-themes, which represents solutions, and then the actual companies that would fit within it, we either found that quality companies don't exist within that universe, or we found that the businesses within them didn't have any trackable KPIs that we could track over the long term to then give to show ourselves and then give to our clients to show the actual impact that they're making. So, there's themes, but also companies that we've had to say no to just for that reason in itself. So yeah.
And do you ever expect, so with the current themes that you've touched on, do you ever expect to switch those out and replace them at any point?
Yeah, absolutely. I mean, with any thematic fund, the themes represent, industry tailwinds that you see over the long term, so call it 8-10 years. But we know that the world, especially within the impact universe, is quickly changing, and we want to make sure that we're following along and able to allocate our capital along with the world changing. And so the fund was designed that the themes, because they're long-term in nature, they likely will turn over very slowly. So call it every 8 to 10 years, you should see a new theme. But yeah, really, we want to make sure that we're capturing the tailwinds and not either jumping the gun too early or leaving them too late.
Great. Okay. And there's a couple more questions, but I do want to switch over to global low vol. So I'll maybe end with this one. This one is, how often can investors expect updates on the fund, and what type of material should they expect to see? That's a good question.
Sure, I can start, and then Rachel, maybe if you want to help as well. So, I mean, with any fund, we'll always have our performance updates on a monthly basis, and during that time as well, we are able to provide either a case study, so an example of what our companies actually do and how they make impact, or an update on an engagement that our team is undergoing with a portfolio holding. But the goal is that once a year, we'll be able to provide an impact annual report, which will have, the SDG alignment of the entire portfolio, the carbon footprint, as well as case studies and a general impact thesis for each company and why we hold it.
Yeah, and I think that point's really important too, Morgan, around measuring the impact each company is going to have. I think that's something that's, to be honest, is very rewarding to see, right? You're seeing your money being invested into companies that are having a measurable impact that you can see progress, over time. So I think that point's going to be, it's a really salient, important point.
Definitely, and we've already seen it through the first set of earnings. It's been really cool actually to see when they report on those KPIs, and they're heading in the right direction. So should be a good report.
Yeah, definitely. Okay, well, thanks again, Morgan and Rachel. And if there are further questions, about that fund, just please put them into the chat and we can come back to them at any time.